I have been saying for a long time that the reason these countries are not bitching, they are the ones accumulating it all, right? So what are they doing in China? Slowly turn up the arbitrage heat so that silver is $3 higher in China, gold is $80 higher, and the stupid brain dead traders, the commercial banks, sophisticated bullion bank traders who have access to all the platforms, they'll buy it off the LBMA, they'll buy it off the COMEX, and they will deliver it at a premium, the arbitrage. It will never come back to China. So that's what they're doing. So they understand what's going on. They understand that we are suppressing the paper price in order to support an illusion of a bond market that is stable and strong and a government that is stable and strong, yet we are insolvent and we are broke and we are 150 plus trillion in debt.
In early Asian trading on Monday, gold prices maintained levels above the mid-$2,100 range. This resurgence in the value of yellow metal is attributed to the increasing likelihood that the U.S. Federal Reserve will initiate interest rate cuts later in the year. AndySchectman, CEO of Miles Franklin, notes that gold has surpassed previous resistance levels, signaling robust upward momentum. Additionally, economists at Société Générale analyze the technical outlook for gold, projecting a continued uptrend with potential objectives of $2,250 and projections of $2,360, with a target near $2,460. There are indications that Brics member China may hold significantly more gold reserves than its official figure of 2,250 tons, possibly amounting to 5,300 tons. The revelation from the People's Bank of China underscores strategic positioning in the gold market. Andy highlights the strategic positioning of countries like China in various commodity markets beyond gold and silver. He emphasizes that such strategic moves enable these nations to challenge the dominance of Western markets in setting commodity prices. In a post on X, formerly Twitter, Peter Schiff discusses the increase in foreign central banks' acquisition of gold, a trend largely driven by China's dominance in the physical gold market. Schiff suggests that continued gold purchases and China's promotion of local currencies could have significant implications for the fate of the U.S. dollar. In light of sanctions imposed on Russia, Brics countries face potential risks of similar actions. Consequently, steps to acquire gold, transition to local currencies, and develop native currencies become imperative. While the dollar's dominance remains unquestioned, Andy notes that its sustainability at its current pace is only guaranteed for a while. Join us as we delve into insights shared by AndySchectman. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Markets are signaling much higher prices. I mean, we can start with gold and we can say that gold has, of course, blown through resistance. There is no more resistance above it. Support now, in essence, would be 2,100. And when you're in a market where resistance is gone, in a market where the world is accumulating at levels that we've never seen before, where the central banks are buying it hand over fist, really the sky is the limit for gold. Who knows how high it goes because you don't have anything above it to act as resistance. Oh yeah, that's gold. They reclassified it as the world's only other tier 1 reserve asset. Who's been buying all the gold? Oh yeah, 16 straight months in a row for China. That's what they tell us. India buying all of this gold and silver. I mean, they're all gobbling it up, right? The only other tier 1 reserve asset. So he's told us it will be a basket of commodities and local currencies. Well, we've known all of that. That's nothing new. How about what's new? This is another thing I've been saying. Here's the new part. I have been saying for a long time that the reason these countries are not bitching is because they are the ones accumulating it all, right? So what are they doing in China? Slowly turn up the arbitrage heat so that silver is $3 higher in China, gold is $80 higher, and the stupid brain dead traders, the commercial banks, sophisticated bullion bank traders who have access to all the platforms, they'll buy it off the LBMA, they'll buy it off the COMEX, and they will deliver it at a premium, the arbitrage. It will never come back to China. So that's what they're doing. So they understand what's going on. They understand that we are suppressing the paper price in order to support an illusion of a bond market that is stable and strong and a government that is stable and strong, yet we are insolvent and we are broke and we are 150 plus trillion in debt. And a trillion seconds ago was 31,688 years ago. People know. Not only that, we weaponize and even confiscate your assets if we don't align the right way. So, we're getting to that last moment. And so the countries are accelerating their increase in consumption and accumulation of all these commodities. And just as a side note, before I dot the I's and cross the T's here, a couple of years ago, the Chinese bought the London Metals Exchange, the LME, which is primarily base metals, copper, zinc, steel, you name it. And now they're going to start warehousing those metals that are traded on the LME in China. Do you see a trend here? It's not just gold and silver. It's all the base metals, all the rare earth metals, and even all of the soft commodities like wheat and soybeans and corn. Oh, wait a minute. The Brics Grain Exchange. They just developed the new Brics Grain Exchange. And you know what they say? Global prices are primarily determined by the Chicago Commodity Exchange. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for food security. So what are they going to do? They're going to start pricing the grain exchange. I said they'll do the same thing with gold and silver. And what do you know? They're all talking about the Moscow exchange. They're all talking about the Shanghai exchange. They're talking about the Dubai exchange. Well, United Arab Emirates did just join the BRICS. Those two countries are part of the BRICS. Here's what's going to happen. At some point, when no one is stupid enough to deliver these very, very strategic, not just industrial, but strategic and precious metals and commodities, where the West sets the price.
The latest data from the U.S. Labor Department reveals that the annual inflation rate for the United States stood at 3.2% for the 12 months ending February, slightly up from the previous rate of 3.1%, published on March 12, 2024. Andy highlights alternative inflation measures, such as John Williams' shadow stats, which suggest a much higher inflation rate, potentially around 11%, indicating discrepancies in official figures. As the presidential campaign season intensifies, the U.S. Federal Reserve appears poised to cut interest rates. This move could provide President Joe Biden with a boost, considering public dissatisfaction with his handling of the economy. However, the Fed's role in shaping attitudes toward high inflation and rising housing costs could become uncomfortable, influencing perceptions during the election year. Andy notes the Federal Reserve's dilemma regarding interest rate policy. Lowering rates to stimulate economic activity risks exacerbating inflation, while raising rates could undermine confidence in the Treasury market and lead to increased borrowing costs, posing challenges for the central bank. Let's get back to the interview.
And I say this biting my tongue because we know that the CPI is CPI. We know that the numbers and the massaging of the CPI index is set to accommodate an inflationary agenda by the U.S. government. And they exclude things like food and energy and housing. And if we look at John Williams of Shadow Stats, who only shows the CPI the way it was calculated prior to them taking these adjustments and putting them into the metric back in 1980 and then 1990 when they made it the first adjustment, inflation would be closer to 11% than it is at the 5% or 4% or 3%, whatever the number is. Let's say it's now 5% annualized based by the last CPI reading. So, but for the past 6-8 months or longer, you could argue we've been getting, or even the last year almost, positive real return when you factor in the CPI against the numbers on the 10-year or even the 6-month, not the 10-year, the 6-month Treasury, the short-term Treasuries, where you can get 5.5% in a very short-term duration Treasury, which outpaces inflation if you believe the inflation numbers, right? So in the face of positive real return, which would be the antithesis of gold that doesn't, or the argument people would use against gold, it doesn't pay a coupon. There is no interest on gold. And for the last decade plus, I would say, well, it sure beats the pants off of negative real return or negative return in terms of higher inflation than you have on interest rates in a very low interest rate environment. But in the face of this positive real return, gold has done very well. It's held up in the face of a return on treasuries that is greater than the inflation rate. So, I don't think they can raise rates. And yeah, they can massage the short end if they want for a little bit. But I think they've kind of reached a point where they're damned if they do and they're damned if they don't. If they continue to ignite inflation through lowering of rates and accommodating the ease in which people are able to borrow money, then you just jack up inflation, which leads to higher interest rates anyway. And you lose confidence. The world will say, they'll never fix it. And we already are losing confidence globally on many levels, as I've touched on. So to retreat from trying to balance or to normalize the balance sheet, to retreat from fighting inflation only signals, what much of the world already knows, and they will lose greater and greater confidence. The bottom line is simply this, is that I think that you can't go any lower in rates or you will begin to precipitously lose demand for the Treasury. And I think that, again, leads to higher rates just to attract people to buy the debt. So they're damned if they do, they're damned if they don't. I truly believe that rates cannot afford to go materially lower than they are right now. And if they did do a token drop, it would be something like a quarter or a half a point, which would mean nothing. And at some point, the market has to, I think, exert itself with greater force than the Fed has the will or the ability to do, because at some point the market is just going to say, look, we don't want your Treasury debt issued by a country that is inflating away their currency, which is eroding the value of the Treasury, which ultimately leads to higher interest rates. And by the way, the weaponizing of the dollar, where we have our brain dead Treasury Secretary sitting in Brazil, which is a member of Brics 2 weeks ago, saying we need to confiscate the Russian Forex reserves, the 380 billion in Forex reserves, not just sanction them the way we did Iran, but to confiscate them and use them to rebuild the Ukraine. You've crossed a line, a Rubicon that you can never come back from. The whole Southern Hemisphere will never trust us ever again. If you're using interest rates and interest rate guidance, if you will, as to decide the direction of your investments, I would say take your profit, sit on the sidelines. Even if you don't buy gold and silver, you can earn 5% plus in a 6-month Treasury with little to no risk. Any duration in the U.S. Treasury market, well, then you start to get into all sorts of risk. And I would simply say that's what the world is seeing. I would simply say that there are better places to be right now where return on your money is great, but return of it is even better.
Given China's strategic positioning in commodity markets, particularly in gold, what implications do you foresee for the global economic order, especially in light of potential shifts away from the dominance of Western markets? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.